Fred Ehrsam, the co-founder of Coinbase, the world's largest crypto exchange, issued one of the sternest cautions on Bitcoin. He has issued a price warning for an impending death cross. Stay tuned to find out what's next for Bitcoin. Hey, welcome to Moneymaker. Moneymaker is a channel dedicated to helping others become financially independent through cryptocurrency trading and investing. The information provided in this video does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the content as such. The content in this video is for educational purposes only and hence should not be considered as financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions. Before we head into the content, let's get ourselves familiarized with what the term death cross actually is. The death cross is a technical chart pattern that indicates a major sell-off is imminent. When a stock's short-term moving average crosses below its long-term moving average, a death cross appears on the chart. The 50-day and 200-day moving averages are the most typical moving averages utilized in this pattern. In 1929, 1938, 1974, and 2008, the death cross indicator proved to be a credible prediction of some of the most severe bear markets in history. 1929, 1938, 1974, and 2008. Because the death cross is a long-term indicator, rather than a short-term chart pattern like the doji, it carries greater weight for investors looking to lock in gains before a new bear market begins. The appearance of the death cross is usually accompanied by an increase in volume. Bitcoin, the world's most popular cryptocurrency, triggered a technical sell signal over the weekend indicating further downside. When the 50-day moving average, DMA, falls below the longer-term 200-day moving average, it is known as a bearish death cross. Technical researchers and traders pay close attention to the indication. We just had the cross, which you can see happened. Around 40 to 43,000 people crossed the border. If we look into previous death crosses, we will see that they don't always mean you'll get a dump right away. In fact, many of them with a price increase in the short term. With the exception of the one in March of 2020, many of those times when the price did appreciate were not sustained. As you can see, we had this death cross back in March of 2020 and the price was on the rise. However, if you look at the death cross from October of 2019, it had a really significant pump. We mean this is nothing to merely scoff at a meager 44%, right? We mean maybe no one gets out of bed for 44%. Despite this, Bitcoin increased by 44%. The current trend has not changed. However, there have been situations when you can tell from the death cross that the price didn't really go that much lower and instead had a great move to the upside. So what we'd say is that the moving averages are lagging indicators, as we've always said. They frequently tell you something you already know. For example, do you need to be reminded that the market has been bearish recently? No, we don't mean that they haven't been, because for a while Bitcoin was worth $50,000 to $60,000 or so and we were playing the game up in here. This used to be our playground, but it's no longer our playground. So we don't need to be told that things have been a little bleak lately, we already know. With that stated, one great thing about a death cross is that you might be able to anticipate a future golden cross. Now, we don't know how long it'll take. We've indicated before that if you look at prior moves such as the 20-week SMA and other similar indicators, we know that historically speaking, at least in recent years, it may take 6 months to get above the 20-week SMA and then hold it at support. But now we have to consider when we can really get back above the 20-week SMA or hope to get back above the 20-week estimate and keep it at support, so that we can re-establish our bullishness. Well, if you look at previous moves this cycle, it took roughly 119 days from the break of the 20-week estimate here to not breaking it to the upside, but actually not breaking the 21-week EMA, but not breaking the 21-week SMA, but then going back above the 20-week estimate here. However, the length of time it took us to test it as a support, regardless of whether we held it or not, is somewhat unimportant. It took roughly 6 months. What if we speculated on a similar move? It fell below it on May 10th, the week of May 10th, and it's already been 35 days. We mean if it takes 6 months to go back above it and then test it as support, we could be looking at the fourth quarter before that happens. So what we'd say is that we're well aware of how simple it is to become too bullish if Bitcoin reaches a few $1,000s. If it drops a few $1,000s, it's also easy to become bearish. However, as we've argued numerous times, Bitcoin is highly likely to be in for a much longer cycle than most people believe. As a result, it's likely to be in for consolidation periods, which most people would likely underestimate. In the same manner that we spent half a year consolidating in 2019 following the shift to 14K, even though you might say you knew it was a phony bull run, we spent half a year consolidating in 2020 after the move to 14K. Before finally going higher, we had to consolidate for a while. When we fell below the 20-week moving average a few weeks ago, we stated that we needed at least 3 to 6 months of consolidation, and we've had approximately a month so far. We mean if we slipped below it. We fell below the 20-week mark on May 10th, and it's currently June 19th, so we've been below the 20-week mark for approximately a week or a month. So we'd say we'll probably need 3 to 6 months of consolidation, which could be as short as 3 months or as long as the end of the year before we can plausibly try to make a push for a new all-time high. We'll be pleasantly delighted if we achieve a new all-time high before then. However, we believe that we require a significant amount of time, not just a week or two, with the anticipation of a V-shaped recovery. But as we've been doing for more than a month, now that we've fallen below it, we'll need a lot of time to go back above it. And you can say that if it takes longer and we don't instantly get back above it, it might make some people bearish, especially if they think it'll go to really high prices by the end of the year, like 300,000. We know that number is thrown about a lot, and we know a lot of folks who follow the stock to flow strategy or predict 288,000 by the end of the year. However, we believe that the possibilities of that happening are slim. If that happens, we'll let you know because that model, of course, turned out to be a fantastic model. However, we believe that in the next 6 months, we should be cautious about making 10 times or nearly 10 times projections. If that happens, that's fantastic, but we're not betting the family farm on it. We talked about the death cross, and you know what we mean when we say it's not a bullish indicator in general. It's not like every time we've had a death cross, prices have immediately skyrocketed. In fact, the last time we had one, that's exactly what occurred. Does this imply that it will always be this way? No, some people may cherry pick the last one and say, look at the last one, but we believe it is critical to look at all of them and to recognize that no one knows what will happen in the short term. But to acknowledge that Bitcoin is still on the same track as before, this market cycle, should make it to 100,000. However, we don't believe that this is required in 2021. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comment section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.